Okay, boom. Alrighty, recording. Okay, these are my rules, and this is kind of my like day to day of how I go about my trading. I know a lot of people kind of get the basics of IFEGs and liquidities and whatnot. But I do get asked a lot like what my setups are and whatnot. So this is just what I look for every single time. I don't have these necessarily written down. I just wrote these down because it's just embedded in my brain at this point. But my rules to enter a trade. So I always identify daily, weekly, and what I mean by that is like intraday or intra-week, not daily or weekly time frame. Which I mean, obviously you can use those, and those will be stronger confluences. Like something like a liquidity like this. I mean, it's very, very unlikely it gets hit, but that's a crucial one. Like it will probably eventually get hit from some sort of dump. But what I mean by that is, throughout the week, right? So like this pump, I super expect us to come take highs. And like I tried, I was in some longs on Friday, like out of here, and I mean I caught a good chunk, but I thought we were for sure going back to take highs. Just the way that we reacted, like this is an important high that will get swept. Also, same with the news candle low. This probably will get swept. So if you just basically what I'm saying, like you just go through each day, look at what liquidity of the day was the most important. Like a spike like this, like that's a very, very important and high like confidence liquidity that'll get swept right here is this one, and it did obviously. And then where I entered my long that day was after it got swept. So that goes on to rule number 2 is don't do wait, there it is. But don't do anything at all until the liquidity swept. So I just mark it out and I just watch it. Like nothing at all. Just don't do anything at all. Just sit there and wait. And then watch the reaction. And the ones that are quick and strong reversals, those are the ones that I look for. And then I look for a 1 minute, a 5 minute, or a 15-minute IFEG. So this example here was prime. So again, this low, I mean, it's just a crazy candle, all these wicks, right? So this liquidity was huge, and like that's all I was watching for all day long, because we didn't come up and take London or Asia. So all this move I didn't give a shit about at all. So then right as we swept, what do we do? So we immediately reject, and I was looking for something in there, but when it's choppy and it's not huge volatility day, I stick to the 5 or 15, and nothing was showing up here for 5 or 15. So I just was like, okay, I'll just chill. And then we came down a little lower, and then this was just such a clean, like crispy move right back up. So I entered off this 5 minute inversion. So I did enter up here, but I just seeked these highs, and my take profit was the bottom of this 5 minute FEG. And yeah, those highs, and then I had a runner probably somewhere. I'm sure I did, but yeah, basically just those highs. That's all it was. Super quick scalp, super easy scalp, and it's like I do that. That's my setup every day. So another example here, this low got swept, and then boom. So I actually caught the short from up here. That one was just Asia. I expected it to go down kind of all overnight, and so I just entered off this 5 minute inversion. But yeah, anyways, this one was a lot cleaner hindsight. So what it happened again, right? So it came in, it swept that really hard, immediately rejected. And then it came and it took this, and it's super easy to catch 10, 20, 30, 40 points out of something like this. Like let's say we entered here, 141. Just to the top was 45 or 185. So that's 44 points, which 44 points that's a lot. Like it's a lot of money. 5 micros is $400. That's a lot of money. That'll change. That's more than most people make it a day job. You know what I mean? So that's all you need to do. One of those a day. That's it. And then on a day like yesterday, that was yesterday, right? Yeah. It was moving. It was really, really moving in the morning. So this was that initial call. I played some calls right off the bat. So we swept some of overnight and pre-market lows, and then immediately rejected. And then we came and we kind of chilled in this 1 minute, so I didn't enter anything. And then once we inversed it, I hopped in some calls, and then I just seeked higher on this one. I mean, maybe yesterday highs or whatever, right? And then I just took some good profit up here. I scaled that as we went, and then I got stopped out on my last runner, like right around here. And then hindsight, obviously, it was news, so it would have been gambling just to like leave them in. But they ended up going, I think they were like 275 a contract initially was my entry, and they ended up going to about $1,000 a contract when they were up here. But we still make money, so that's all good with me. I'm all good on that. But yeah, so I'll go back to my rules real quick and finish this out. So rules while I'm in a trade is I never ever ever average in. I enter exactly where I enter. I have my stop set where it's set, and usually that's just the recent lower high. And then my take profit is the only thing that will vary here and there. I target initial internal liquidities. That's my first trim, always. First trim, always. And then seek another one. It's a little higher. And then ultimate TP is high a day or low a day, whatever, if you're in a longer or short. But yeah, so that's what I mean by predefined risk. So for me, I trade 50Ks and 150K accounts. On my 50Ks, per trade, I risk about 150 to 250 bucks for my loss. That's my risk. And then 150K accounts, I do 350 to 450. And I always do 2 to 1 at very least, risk to reward. So if you look at that flip shot, I'm making at least 300 to 500 a trade on profit wise, and then I'm making about 700 to 900 a trade profit usually. And I mean that varies because again, runners is where you make your real money. Like for example, this short that I did catch, like I took a lot of my trims. It's like I entered here. Here is where I entered, somewhere here. I took a lot of trims here. I think I just let it ride, and then I took another trim once I took that low again, and then this was where the actual money was made. So like I made about like 1100 off these moves, and then this was 1900 more. Like I made 3 grand off that trade per account. So but yeah, so don't average in. I feel like every time I've done it, I just always get cooked, and I've let so many good trades go bad because of averaging in, whether that's averaging down or up. Because if you average down, then you're just putting more risk on, even though it might be a tight stop where you average down. It's just still you're adding more risk for no real reason. And you want to be very systemic with this. Like you want to be like consistent sizing, consistent everything. Obviously, if it's a really, really high confidence setup or a really, really low confidence setup, but it's something you want to take a stab at, adjust size a little bit. Like you can go heavier size, like have that talk with yourself. Like let's say, hey, I actually want to risk about 600 bucks instead of 350 to 450. You know what I mean? Let's do it because my upside is way higher and the confidence in this trade is way higher. So I'm more confident about winning this trade and I want to kind of capitalize on that, right? So, but you always want to use micros. Like I never use minis because let's say I like 2 minis is probably the max amount I'd trade on an account per trade. And I want to be able to scale out very flexibly. You know what I mean? Like I want to take 5 micros at about 20 points in profit, another 5 micros about 40 points in profit. Let's say it's at 100 points in profit, and I'm like, I just want to lock a little bit more up, but it still looks like it's going to run, so I'll just scale another 5 out. And then, so I have 20, so I have like a lot more flexibility in the trade. So at the end of the day, it's the exact same dollar value. You do 20 minis or 20 micros to 2 minis, you hit 40 points, that's 1,600 bucks. It's the same exact shit. There's tiny bit more fees, but you don't really get fees in prop firms, so it doesn't really matter much. And then I only move my, like I will leave my stops still at where they were if it's a really high confidence trade and I've taken trims. Like I don't adjust my stop until it's like well over where I actually like really wanted it to, and I'm just leaving a runner basically. Like unless it's a low confidence trade. Let's say I am up about 20 points. I take a trim. I don't love the setup, especially how it delivered to there, because sometimes it'll just deliver like shit, and that breaks my confidence in a trade. So I'll go take a trim. I'll move my stops to break even, so it might just be a tiny scalp. You know what I mean? Let's say I took 5 micros off, it might just be a $200 trade, but that's still great. That's still great. And then a couple other rules is 1 to 3 trades per day maximum. And then I am a big advocate about taking days off when you have 3 or more red days in a row. I didn't really do that this month, and I felt the like mental toll. So I've been really enjoying this weekend, really just like not giving a shit about anything and just kind of floating, which is good for my brain right now because yeah, this month has been a tough month. Yesterday was a good win and it was a needed win, but yeah, I was very close to taking about a week off, and sometimes I probably should more than I do, but have that itch in me and that fight in me that I just want to keep doing my thing. But and then when a trade's lost and you can't figure it out why, definitely journal it. I think you should journal all your trades until you're pretty consistently profitable. You've got a payout or two and it wasn't, from gambling it. You know what I mean? Like I think you should always journal until your system's so ingrained in your brain and you're pretty profitable. Like, I think that those are the two things that you can kind of be like, okay, I don't really need to journal as much. But again, when I lose a trade that I can't figure out why I lost, I'll journal it so then I can go back and reference it. But anyways, that's kind of more or less all I had. I know it was short and sweet. I'll go see if there's any. Yeah, hold on. Oh shit, Age, did you not? Oh no, you guys can hear me, right? And then prop firm, I'm very new to this. Can you talk about it? Yeah, so prop firms, I'll go to Top Step because they're really um, they're kind of the like gold standard. So what they do is they essentially offer you funds for cheap fees. Basically the best risk to reward if you're getting into futures because so it's a $50,000 account is what they say, but it really is only a $2,000 account. But at the same time, you're getting a $2,000 account for 200 total dollars. Like it's $50 for the fee to buy it, and then once you pass the test, it's $150 to activate it. So $200 for a $2,000 account, and it's really good way to like just get dip your toes in the water and kind of just start experimenting with futures if you're just getting into it. Like I think it's the best risk to reward. Like I use them all the time. I have a personal account, but I just like I risk a lot heavier on prop firms intentionally because I mean shit, dude. You can on a Top Step you can have 5 accounts, right? And you can get 5K payouts, and all you need is like per account, and all you need is 5 total winning days of $200 a day. And so like you can make $25,000 a week for a total cost of $1,000. You know what I mean? It's not real money, so it's simulated money. But the goal, and like it's been a lot heavier push lately, is once you've reached certain criteria, which take profit's my favorite, and for them it's just make X amount of dollars. So on 150K, if you make $10,000 in profit, they will move you to a live account with real money that they funded. And again, your upfront cost is only the fees of the account. So at the end of the day, you can basically turn like take profits $250 I think for a 150K account, and you can turn that into actual billions if you do it right. You know what I mean? So but I know that's a long shot, it's a huge exaggeration, but yeah, exactly. $200, the risk is blowing the account and then you can't trade it anymore, so if you want to keep going you have to buy a new account. But yeah, exactly. They're pretty legit. They're in Forex too. I don't know if where your background is, if it's options or Forex, but yeah, they have prop firms in Forex as well. Yeah, check out the there's some good deals that we've got right now for some props. So go check out the hashtag prop firm links channel. But yeah, do you guys have any questions? I kind of went over everything that I really wanted to do. I know it was a lot shorter than I'm sure a lot of you wanted, but yeah, let me know. I'm gonna stop the recording here.